Hello guys, this is Anshuman Rao and welcome back to another brand new video. This video is going to be about how I maintain my trading journal and how I maintain my trading statistics. So, let you know that these two are, completely different things. You know, it's all about maintaining your documents while trading. So, there are two types of documents basically. One is the complete, trading journal, which, as you can hear in all throughout the social medias, every trading influencer talks about trading journal, trading journal, trading journal. But this is one of the aspects, and the other aspect is the trading statistics. So there are softwares like tradezilla and etc, which which are paid softwares which people use to maintain their trading statistics. But you know if you are trading in a broker and you want to maintain your trading statistics, then only you have to purchase those kinds of softwares to maintain your trading statistics. But if you are you know trading in prop firms, you don't need those kinds of softwares, because prop firms indeed have their own trading statistics management inbuilt in their own software. So before jumping into explaining my trading journal and my trading statistics, you know, um let's jump into the prop firm criteria, that how prop firms have this integrated trading statistics management. So with this, I will be also showing you my trading statistics management criteria. And I trade basically in this prop firm, as you can see, the Funded Next platform, and this is one of my accounts which I have passed. And as you can see, if we jump into the trading overview, we will be seeing all the complete detailed statistics over here. And in statistics, what we can see here is the equity, the balance, the profitability, average winning trade size, and average losing trade size. Now, total number of trades, total number of average lots, total number of lots basically, not average lots, total number of lots, average risk to reward ratio, win rate, loss rate, profit factor, best trade, worst trade, long trade, short one, gross profit and gross loss. And in this below, it's the complete trading statement over here. The trades which I took in this account itself. And yeah, as you can see here, this is a two-page trading statement. And if you jump into the analytics, in the analytics section, you can see the progress report, the progress growth chart, as you can see. So this tells about how, in which date, how you have performed in this account. As you can see, this is a complete linear growth in this account over here. And if you scroll down below, you can see the pie chart over here, which defines the most traded pairs, the most traded financial instruments. So as you can see the example over here, the most traded pair is USD/JPY. The second most traded pair in this account was GBP/USD, and the third most was XAU/USD. So for different accounts, there are different analytics and different statistics. As you can see, this is one of my accounts, and I have passed and breached many accounts. This inactive section is past accounts, and this breached section is the accounts I have failed. So I have many accounts. So if we jump into any of the account, as you can see, if we jump into this account, so this is one of the this I showed you, pardon me. So let's jump into a breached account. Let me show you a breached account, how a breached account looks like. So this is how a breached account looks like. And I have failed this account. So this is the rule breach history details, and this is the complete account over here which I breached, and this is the complete statistics of the account. So this is how a breached account statistics looks like, and these are the statistics and these are the analytics. So this is a complete linear downfall, and this is what the pie chart of this account looks like. The most traded pair was XAUSD, and the second most was US oil. So for different accounts, there are different statistics and different analytics. So this this was all about trading statistics. The second aspect, let's jump into the second aspect now. The most, you know, asked, the most, famous aspect, and also the most helpful aspect in a trader's life. That is the trading journal. So, I prefer my trading journal to be handwritten, and this is how I maintain my trading journal. And let's show you this. So these are basically the 2 pages of one single trading session, and I will be explaining it to you. But let me just close all of these things, all of this mess. So these are the two trading. Basically this is one trading journal, but there are 2 pages actually. Pardon me. So yeah. So this was one of my trading journal. Uh, Actually, this is one. This is the trading journal which I'm going to show you. You know, don't confuse it with the 2 pages are different. No, 2 pages. It's one journal itself. This one journal has 2 pages, right? Now let's jump into the journal and let's you know I will be going to explain you what is the format of my journal. So how do I journal my trades? How do I take handwritten notes? So as you can clearly see that this is the 1st April. You know this trading journal is of 1st April 2026. And the first point was I was analyzing my respective instruments. Pardon me for my handwriting because I just write with the flow, and when I write with the flow, this is all my handwriting is because I have to write speed because the markets are moving very fast and my emotions are also moving very fast, and according to my emotions, I have to write very fast. So when I write very fast, this is what my handwriting looks like. So I will be reading it so that you don't get confused by my handwriting. I was analyzing my respective instruments. So my respective instruments were Euro USD, USD JPY, GBP USD, gold, silver, and US oil, and also UK Brent oil. Second point, saw my setup forming in USD JPY. Now waiting for confirmation before executing the trade. So, you know, in the second point, while analyzing, I found my setup in USD JPY. As you can see, the second most traded pair in my accounts. So what I in second point, what I wrote was, while analyzing my trades, while analyzing not my trades, while analyzing the financial instruments which are on my watch list. So while analyzing those, I saw my setup forming in USD JPY, but now I'm waiting for the confirmation before executing my trade, before entering into my trade. So if you don't know my strategy, let's I would recommend you to watch my previous videos, because in this video I will be not going to explaining you my strategy, because the video will be turning into a complete long film. So I would suggest you, if you don't know my strategy, then I would be suggesting you to watch my previous videos. I have made tons of videos explaining my strategy. So let's jump into the third point. Executed a trade in gold because I saw my setup forming and also saw the confirmation and executed the trade with impulse entry. So, sometimes in my strategy, there are situations, you know, we are getting the confirmation, but still the price is moving, and without waiting for any candle closing, I just execute my trade, because at those times, the volumes are high, and also there is times like London Open, New York Open. At those times when the price is breaking, and there is a high volume, then there is a high probability for the price to, if the price breaks in a certain uh, resistance or a support, and even though it doesn't give a closure, then still then you know there are higher probabilities for the price to drive into that particular direction, whether it's long or short side. So I think you might not be getting what I'm telling because you don't know my strategy, and I would still highly recommend you to watch my previous videos if you want to know my strategy. So overall, what happened here in this third point was, you know, I found my setup in USDJPY, but I didn't wait for the confirmation. Instead, when I saw a gold chart, the gold chart, I found my setup and also I found the confirmation and I took an impulse entry. Impulse entry means I didn't wait for another confirmation. Instead, while before the candle closing, I executed my trade, even though the price was still moving and didn't give a complete perfect confirmation. So in the fourth point, as you can see, I booked my partials because the drawdown were I booked my partials because the drawdown reached minus 1% plus. Sorry, I didn't add the minus here, but drawdown is always in negative. So I was trading $25,000 account while I was writing this journal. So this journal is of a $25,000 account. So when I wrote this first fourth point, my account drawdown went to minus. I still remember it went to nearly about minus $328. And if you are educated enough, then you still know that 1% of $25,000 is $250. So my account reached around minus $328. So it's more than 1%. So at that time I booked my partials. It's better to book partials while you are in drawdown, and it's better to add upon the quantity when you are in positive. Basic basic common sense in trading world. But people do it in the vice versa way, which it just fucks up their account. Fifth point, I closed the trade and ended up losing nearly 2% of my total account. So I just closed my gold trade and I lost around 2%. So which makes up to little more than over $500. And the sixth point, I executed another trade in oil, US oil, for sell side with 22 lots, which is very commission eating. You know, while trading in oil, you get to give lots of commissions. So trading in oil is a little bit complicated. But still, then after this sixth point, as you can see, I blew my account due to over position sizing. Boom! I just lost the account on 1st April 2026. So this is how making these trading journals lets you remember that how you blew the account on the particular date, and it just shows you the mistakes that you have performed, and that's the most important thing. The second page of this journal states that the important mistakes I performed during trading this account. The first mistake, I over position sized in all of the trades that I took in this account. The complete obvious mistake, the complete obvious thing which I saw in myself, what I was doing while trading this account. I just over position sized. If you compare to the $25,000 account, what what is the average lot size you should take, I always over position sized in that matter. That's why one of the things which made the floating PNL even bigger. And when the floating PNL keeps up, keeps going up and down in a very huge amount, then your emotions fluctuate and you tend to take wrong decisions. In the second point, I didn't wait for any reliable confirmation and took impulse entries being impatient. Let me read it for you again. I didn't wait for any reliable confirmation and took impulse entries being impatient. So I explained this in the gold trade, and if you don't know that how the gold trade went, let me show you it. Let me show it to you again. As you can see in the third point, executed a trade in gold because I saw my setup forming and also saw the confirmation, and executed the trade with impulse entry. So I should have waited for another confirmation, which is the candle closure. But still, then I didn't wait for the candle closing, and instead I took an impulse entry, which was one of my biggest mistakes, which resulted me in the first loss of this account, first you know losing trade of this account. And once the first trade of your account gets into negative, first trade of your account should be in positive, which boosts your confidence. But if you are taking an account and you took a first trade in your account, and that too, it you closed it with a negative, the confidence completely comes down, and it affects your confidence basically. So in the third point, as you can see, I took losses which were out of my risk appetite. So I took losses which were out of my risk appetite means I lost more than what I should have risked. So in $25,000, what should you risk? In a single day, you should risk $750 max. And what is the, if you're trading a prop firm in Funded Next, then what is the daily loss limit of $25,000? That is $1,250. But still, then you don't go, to that level. But still, then you have to have a mental stop loss, which is $750 in a day max. But still, then I lost more than that. I lost even more than the daily loss limit, which is completely stupid. The fourth point, the last point. Moreover, I just became greedy. Moreover, become I just be- Moreover, I just became greedy, and I was forgetting to make more money. I was sorry, not forgetting, I was targeting to make more money in small moves and became completely careless about my account size and risk appetite. Let me read it for you again. Moreover, I just became greedy and I was targeting to make more money in small moves and became completely careless about my account size and risk appetite. So, this is what a trading journal looks like. It explains your complete psychology while trading, while you are trading a trading session. While you are trading a trading session, whatever is going through your mind, you should note down in a trading journal. You should note down in a pen, paper, or an ipad, or your tab, or whatever you have. You should be writing handwritten notes whatever you feel while trading during your respective trading session. If you are trading in New York session, you should write anything, whatever you feel while trading. Before taking a trade, you should write 2 points, 2 point at least, max to max 2 points. You know, before taking a trade, at least you have to write max to max 2 points. That what you feel during, before executing the trade, what you thought of, before executing the trade, and after you executing the trade, how you are feeling. Did you over position size? Did you, executed the trade properly? What were the mistakes? What were the correct things you did while executing the trade? And after closing the position, did you, are you are are you satisfied with that trade, or did you lost that trade? Whether the trade was a good loss or a bad loss, or a good profit or a bad profit, you should note all of these things in a pen or paper format. And you can do that, but this video was all about explaining my trading journal. So my trading journal, I keep it very simple. I just write whatever I feel like writing, so that I can make that mind to muscle connection with the markets. So this was all for the video, and hope you liked it, and hope you enjoyed it, and I hope you have learned something from this video. And yeah, this is Aganshu Mandalo signing off, and keep trading, keep learning, and keep enjoying.